What's up, everybody? Welcome to a new episode of SuperStonks with another deep approach into the MOMO company. After the last presentation where I was talking about the fundamentals of MOMO, people reached out via Twitter, StockTwits, and were asking if I could provide some further information. So what I did is I put together all the information that I was collecting over the past months on the MOMO company to just refine my investment approach, and I want to share that with you today. So let's just dive into it. Of course, I gotta start with a little disclaimer. You want to make sure if before you do an investment into stocks, this might be risky. You should consult with your financial advisor. And also, I will share this presentation on my open Google Drive, so you can download it. There are links in this presentation. If you click on those links, you're gonna get to external websites. I cannot assume responsibility for the content shared there, for the security on these websites, so you want to make sure to have proper security features installed on your device. So where am I? I am here, and there we go. First, I want to talk about the company and the apps. I want to take a closer look at the competition for MOMO. I want to look at the share structure. It's not common shares, it's ADR, ADS structure. We're going to take a short look on the MOMO app, on the Tantan app. We're going to classify the stock. We're going to look at the metrics and some numbers. I'm going to do a short valuation. This is my approach to figure out if the stock is appropriately priced. We're going to look at the margin of safety, look at comparable business valuations. We're going to look at the moat. If MOMO has a moat, a competitive moat, just to give it some durable competitive advantage, classic Buffett. What we also have to do is we are dealing with a China stock, so we gotta take a look at risks that are involved or risks that occur when you are investing into Chinese companies. We will also look closer on specific company risks. We evaluate the management and the management outlook, and at the end you're going to get a little summary from everything that we talked about in here. So let's go. The MOMO Inc. company was founded in 2011, so it's 10 years anniversary this year. They started with the MOMO Core app. Now they bought Tantan back in 2018, which is the prospective growth app of the company. It's MOMO Inc. is a Chinese company located in Beijing. It's listed in the US on the Nasdaq, and they bought Tantan 2018 for 735 million in a cash and stock transaction. So basically, it's a very simple company, very two product focused only. So this is simple to understand. And I really do like companies that are focused on a specific area and that are not hard to understand. Since if you got an easy company, you're going to have a much easier time in doing your further approach and your valuation. So, who are the competitors? I was only looking at competition in China here because China makes it pretty difficult for foreign companies to enter the market. And so basically every competitor, a direct competitor for MOMO and Tantan, are located in China. And what I figured out is if you look at the names, you might know the stock of the companies. They are also mostly listed in the US. When you look at them, on the first glance, they might appear as direct competition because they offer the same services. So I agree that we are dealing with companies in the same industry. They are offering the same services like video streaming and, of course, social connections and so on. But they are not really as focused on the dating features like MOMO and Tantan. Those I would consider are social dating pure plays like Tinder. And if you look at Weeaboo, it's like Twitter. If you look at Choi or Huya, those are mostly video streaming services. Of course, you know TikTok. TikTok is one of the biggest live video streams. And WeChat is the Chinese WhatsApp. Do you really consider Twitter or WhatsApp or some video apps linked to specifically dating? I don't think so. Of course, you're going to use them at some later point when you meet the person, when you communicate with the person, but you don't start interacting with people and getting to know people just by a simple mechanism like it's featured in Tinder or the Chinese version of Tinder, Tantan or MOMO. So the only direct competitor in the field of dating, I would consider Soul. There are some more, but I want to specifically go to Soul because they had a nice track record over the past couple of months. So I would say they are a dating pure play, but there's a main difference. If you go on Tinder or Momo, you are basically looking for, I don't know, not too much commitment. You know, you wanna have a good time, you wanna meet people, you wanna hook up with people. That's what you use Tantan and Momo for. Soul is much more for serious relationships. They're gonna offer you a personality test, some type of character evaluation, and they're gonna match you with people sharing the same or complementary character traits. So you might find your soulmate. That's why it's called Soul, I guess. Yeah, so that's the direct competition there, but totally focused on another approach on finding relationships. If you look at the stocks, if you want to invest in the company, if you're convinced that Momo or Tantan are a company or apps to invest in, you want to think about the stock structure, right? I mean, you are not buying shares like you would, for example, in GameStop. GameStop, US company, you buy the stock, you got the stock, you're a shareholder. If you're investing in Chinese companies, you have to deal with the ADS, ADR structure. It's a little legal thing you might want to consider because you are not really a shareholder. You do not get to vote as a shareholder, and there might be specific risks involved. There might be certain risks coming along with the ADS and ADR structure. So what you want to do is you want to take a look at the F1 statement where the company describes the features of their ADRs. And you might want to read this Wall Street Journal article that helps you evaluate some of the risks and helps you where you want to start looking at. I'm not going to do a deep dive here. This is something you have to do yourself because I cannot really give you a defined, you got to do this or you don't, you should not do that approach. It's something that you have to know the risks, what happens if the company gets delisted and so on. There's risks involved to that, but I'm not a legal advisor. And so I would consider you get help there if you feel uncomfortable with it. It's kind of complex thing to deal with. You're going to read a lot of boring text. I think I did it. I came to the conclusion that I'm willing to take the risk because the delisting risk, which I want to elaborate in a couple of minutes a bit further. Well, it's still a couple of years ahead, so I don't really consider it an imminent threat. And so it's okay with me. But as I said, do your own research there. Get help if you need any help. And just be aware of the situation here. Okay, going to the apps, the Momo app. This is the basic core app of the Momo company. They reported monthly active users of almost 114 million. They have paying users of 9 million, available in China, other Asian countries. The role in the company is, it's their matured app, right? So as we can see later, revenues have plateaued, but the app generates a huge amount of cash. So they use the app as the cash cow to finance further growth and reinvestments into other services and apps like value-added services or just the app Tantan. Target group is, as any app, the younger folks out there, the millennials, Generation Z, but basically anyone who's into social dating. And so I think you can't really say it's just the younger people. It's basically everyone who's interested in that. How do they generate cash? Well, that's the genius about it. They use the virtual gifts. So if I like a streamer or a talent that's creating videos out there and I like their videos, I can award them with basically virtual gifts. So I go into the gift store, I would say, on the MOMO app. I pay real money for this virtual gift. So if I want to buy you a fancy spaceship, it would, let's say, cost $10. I award you with the fancy spaceship and I pay the $10. You get 40% or 50%, so $4 or $5, and MOMO keeps the rest. So I would consider this a genius business model because it's very simple. And it's just money generation for virtual gifts. It's a big thing in China. I really don't use the apps. So let me be clear here. I have not used any of the apps anyhow. And I'm not in China. I didn't use Tinder as well. But I've seen, I got some friends who were looking for dates a couple of years ago, and they used the app a lot. So MOMO is, it's the cash cow. They also have subscription services, and of course they generate an amount of revenue by offering advertising for other companies. So what we want to look at are the headwinds and the tailwinds of the apps. Of course, I mean, the stock price went down. It's a disaster just to look at the chart. What headwinds do they have? Well, they generated a lot of revenue by their main, the biggest payers were private business owners. And of course, they got slashed in 2020 when COVID hit China. It was a harsh lockdown. Businesses were closed. So those guys were just saving their money, not spending that much money on for their services, for advertising. So I guess it's a problem that occurred over the whole world. Of course, when you generate a lot of money with your apps, you're going to attract competition. This also happens. Some other companies are offering similar services. As I said, it's not pure plays as MOMO is, but of course, video streaming is big. MOMO offers video streaming, so there's different margin at different companies. And the talents might get attracted to other platforms where they can keep a bigger part of the share. So this is one issue. Also, MOMO has a reputation of a sex cam site and a hookup app. This is just a fact. I've never used the app, as I said, so I can't really tell. But apparently, it's on the watch list from the authorities, from the government. And this is something you might want to consider. They are also dependent, and they are more dependent, as they liked to admit in the past, on the key opinion leaders and their streamers. And the streamers are also engaged with agencies, so there's a little bit of dependency there, or a bigger dependency, whatever you might call it. So MOMO has to act on this as well, and they did, which I would consider is a tailwind for the future, because they have secured their key opinion leaders and the artists and agencies by what they call golden broadcaster contracts, which is a long-term contract just to tie the talents and streamers to their platform, offer them attractive revenue shares and margins for their services. So they have they can just rely on those streamers to stay on the platform for the next couple of years. Tantan, there was a source I found, and it stated it had 360 million registered users, and this number is just incredibly huge, right? I mean, this is just the United States and Canada put together. And but they don't have as many paying users, and the users are not paying as much as they do for Momo. Also available mostly in China and other Asian countries. The role in the company is that's the early stage growth product that Momo is focusing on for the next couple of years. And it has basically the same target group of people. Cash generation is basically the same, value-added services, but you start with you can either use the app for free and do a couple of swipes per day, or you can buy a subscription, which is, I think, somewhere around $60 a year. So I would consider this pretty expensive. Or at least it feels expensive for many people. So there's a huge, I would say, hurdle just to get the basic subscription. So the company noticed that, and they are focusing on adding value-added services. Headwinds are basically the same as Momo, but Tantan was audited, or they were on the watch list from the Chinese government. And they banned the app in 2019 from the Chinese app stores. It's still on the regulator's watch list, so there might be some threats here. They claim to have cleaned up their app ecosystem, so getting rid of fake users, getting rid of anything too sexual on the app, because the government does not want to see those kind of content shared on the apps. And so you got to be careful here. Many Chinese are also permanently banned in India as of now, and there's a list you can look up on the internet. The ban is at the moment permanently, so Tantan was actually focusing on gaining huge momentum in India, where they might reach out to a strong user base. And of course, other companies are looking at Tantan, trying to figure out similar services. They have not done so until now, as far as I'm concerned, but it might happen in the future. But there's no negative without a positive, right? So what are the tailwinds? Well, if you look at the Chinese population, there's a huge number of younger people out there. There's a lot number of singles out there. And they are all highly digitalized. China has a growing middle class that will continue at least for the next 10 years in the future. So there's going to be a lot of free money that they can spend on services and apps and whatever. And the company's adaptation to value-added services and the refinement of the user experience might also prove to be a huge tailwind for the app and for the company in generating new cash flows. So I think, of course, you might be every company, every app has its challenges you have to be aware of. But I think if you have good management in place and they ask the right questions on how can we go around those challenges, how can we face those challenges and create solutions, then I think the tailwinds are more important, and you really need to look at those, because any investment that you make is just focused on the future, and the future events might be priced in right now. But I think in the case of Momo, they are not priced in appropriately, and so the stock might be undervalued. But we get to this in a bit later. For now, Momo, Tantan, headwinds. They had some troubles in the past, but I think the tailwinds are bigger than the challenges they will face in the near future. In order to understand the business that you invest in, you need to be aware of what is really driving the business, right? And if you look at the Western dating apps, Bumble, Tinder, or Match Group, any other app in the game of dating, why are they so expensive? I mean, they are expensive compared to Momo. It's because they report user growth. Bumble IPO'd lately, huge expectations priced in there. And the key driver to the future success of these kinds of companies is the growth of the active user base. It's much easier when you have a growing user base that you sell more services, you sell more additional features of your app, which is basically generating revenue. So I think there's no doubt about that the active user growth is very important for those kinds of companies. And how do they create their revenues? Well, it's basically virtual gifts, as it is in the case for MOMO, which is a big thing in China. They have a subscription service, also MOMO and Tantan, value-added services where you just pay as you want if you want to use the additional services. Let's say Tantan, or compared to Tinder, it's the super likes. Okay, if you want to spend $5 on super likes on a given day, you do it. If not, you just don't have to. And the fourth source of revenue is basically advertising, but it's not that big, as we are about to see in a couple of slides later. So those are basically the income drivers of the company. The company is very simple, as I said in the beginning. 2 apps, MOMO, Tantan, focused on dating. It's a pure play, and basically without any serious competition in the country of China. And if you got money flowing in, you also have to pay for the infrastructure that the company has. Since it's a media company and basically an app provider, what's the main expenses that they will have to come up with? Of course, they have to provide or maintain a IT infrastructure for the servers, their IT security, and so on and so on. So there's an expense here. In order to gain momentum, to reach out to a lot of potential users, they will have to pay a lot of advertising fees. And of course, you need programmers, data scientists, and so on to just improve the services and to come up with new features. Also, keeping everything running smoothly, you have to pay a number of employees. Also, I didn't really list agencies and talents up here because I would say those are the employees, and the services or the agencies and the talents that they have to pay for is basically direct cost of revenue. So the major expenses here, I was focusing on sales, general, and administrative. Of course, if you consider the talents and agencies costs, that should be right here. Of course, you're right. I just left them out because it's directly attached to the cost of revenues. That's the only reason. So, in the last financial transcript for the year 2020, MOMO provided some numbers that I consolidated here, just to get an overview over how did the numbers evolve and how are the numbers evolving when you just look at the apps. So, from full year 2019 to 2020, net income declined. Revenue stayed flat, declined a little bit. The costs are pretty solid, but it's 100 million difference in the net income. And of course, this is a huge number, right? You can do a lot more with $100 million than without the 100 million. I mean, it's not a big discussion here. But what's interesting to see is when you break down the numbers and you compare the average amount that the active paying user is spending on the platforms, we see that the amount spent on MOMO declined at about 20%. But the good thing is, and this fits the story and the narrative of the company, they are focusing on the growth of Tantan. So this number here, the amount spent by the active user, just doubled. So I think when you consider the strategy of the company focusing on the growth of Tantan, this makes sense, and this is proving that they are on the right track. So I guess we're in a good way. 2020 was heavily impacted by COVID, and if you remember, as I just said a couple of minutes ago, the main paying user of MOMO or on the MOMO platform are business owners. So if you are a business owner and your business is closed down by due to the lockdown and COVID and everything, and you don't make money, of course you spend less. So of course the average amount goes down. And knowing that, it's not surprising that this is an effect that affected the company and the company's numbers. But I think once everybody's getting vaccinated and they have vaccines in China, in the Western world, in Russia, everywhere, I think we are back on the normal track in 2021. So I think those numbers might see a big improvement at the end of this year. But this is just an expectation. I might be wrong, of course. We don't know how this is turning out. And here's the thumbs down, because of course those numbers suck if you watch it from one year to the other. But yeah, if we look in the future, I think we are on a good track. This is a painful picture to watch, just hurts. But what I find very funny and very interesting is if you look at the current share price, and I prepared, just talking about the share price, I prepared this presentation over the past 2 weeks, I guess. So the share price here might not be the exact share price as it was at the closing markets on Friday or yesterday. So some numbers that you see here might not be up to date on the day, but they are not that far away. What this chart is basically telling me, if you invested in the company 5 years ago and you were just holding on to the stock, basically nothing happened. It's the same price as it was 5 years ago, and it just doesn't make sense, right? I mean, there's a lot that has changed. Compare revenue here to revenue now. Compare user base here to user base here. It has improved a lot. And if you're telling me that the company was worth that this is the fair price right now, and this was the fair price 5 years ago, I would disagree with you. Because as we see in between, when there was the growth story, the share price was rising tremendously. You had a very good time if you took some profits here or here. Of course, you have your annual or semi-annual swings here. If you were a swing trader, you could have profited a lot. Many things happened. That was the growth story. Spruce Point report came out here. Spruce Point is a famous short seller. They did an investigative report on the MOMO stock. The investigative report is still available on their website. I would advise you to have a look at it. It's 70 pages, right? 70 pages. A long report, a lot of information. And I'm convinced if you are a stock picker, you need to watch closely to anybody who is totally disagreeing with your position. And if they provide you a report, just as I'm trying to provide you a fair and rational presentation of the company, you might want to have a look at it. And if you are long investor only and you are focused on the positives of a company, definitely, I really, really encourage you, take a look at somebody who totally disagrees with you or is trying to get a real picture of the circumstances of a company. Spruce Point report is very good, very detailed. Look at it. It had a big impact on the stock as well, very short-term impact. And yeah, since here, there were mixed reports of the companies. The app got banned, so there was a short recovery. Then the shares were just trashed here. They recovered again, and then boom, you got COVID. And what happened here, everybody remembers, all the stocks and indexes were going down. The news didn't improve here. The numbers were going down for MOMO. And what you got here, February, 2 months ago, big rebound in tech stock, and boom, many bad news. So price levels here were just not sustainable. It's a pain in the ass because I jumped in right here. I'm still holding, but it's very disappointing when you have an increase in your share price of about 30% in a couple of days, and then now you're back and it's just not moving. Just sucks. Yeah, so this is the chart, short history. Basically, what I'm trying to say is a lot of things happened. Now we're back at a valuation level from 5 years ago. I think it's not justified. There has been a lot of improvement in the company, in the stock, and we are much, much further than we were here, and the price is the same, so it doesn't make sense to me. So, what's the next thing you have to know? You always have to know the kind of stock or the kind of company you are investing in. It doesn't make sense if you are investing in a stock without knowing the type of stock that you are dealing with. Is it an asset play, a turnaround, stalwart, cyclical, slow, or fast grower? I would advise you to just read the book One Up on Wall Street by Peter Lynch. Basically, that's the blueprint of that's the exact blueprint of those 6 categories that I'm using. And placing MOMO in one of the categories is important, because if you jump in at an attractive price point, or what you might consider is an attractive price, you want to know what you got to deal with, right? If it's a turnaround and you get on the stock in the wrong moment and you are just ahead of the downturn, the price may look attractive, but it isn't, because once the business goes down, the stock price goes down. And in the long run, stock price always reflects business. It's just a fact, and something that you have to know. If you're an investor, if you are a trader or a gambler, that shit's not important to you, because you just don't care. And all you care about is the price, and you try to interpret some charts and figure out some patterns. And that's just not the game I'm in, and that's something I'm not supporting, because to me it's just gambling. And why would you invest your hard-earned money on the gambling table, right? Then you could buy lottery tickets. But what I'm trying to say is the game is much safer if you know what you're doing. And so I'm trying to categorize the MOMO company. So is it an asset play? I think in some sort of way, because if I'm trying to figure out the margin of safety, I want to take a look at the assets, which is easily possible on the MOMO stock. Is it a turnaround? It's not a turnaround due to any business cycle, like for the automotive industry or the commodity industry, right? But it's a turnaround in terms of it went from fast grower to, let's say, slow grower or slow decliner. It's not a cyclical, because it doesn't have it's not a cyclical. It's not, doesn't follow any business cycle, and it's not a turnaround, because turnaround is like it went down. It's basically facing bankruptcy. What are those examples for turnarounds? Well, GameStop is one for sure. Tupperware, big turnaround, huge turnaround. Everybody thought it was going bankrupt. I had some Tupperware stocks when they were about end of 2019, so $7 or $8. They went down to what, 150, 190, and then they just went back to over 25 or 30. I don't remember the exact share price, but that was basically a 10 to 15 bagger, or even 20 bagger at the right when you jumped in at April 2020. So it's a kind of an asset play. It's kind of a turnaround from a slow grower or slow decliner to a fast grower again, and it's certainly not one of those. So I guess we are safe here, and this is the basis for our further valuation. Also, we want to take a look at the product cycle. This is something I think many people just don't do. When you are a typical retail stock investor or retail investor, did you ever look at the products and where they are on the product lifecycle? This is a typical standardized product lifecycle. We go from introduction to growth to maturity and into decline. So what MOMO has to do, or you as an investor in the stock have to figure out, what are the products they are selling and where are they? The MOMO core app certainly faced maturity. It passed the climax here, and now we are, I would say, right about here. Heavily monetized, it's a big cash cow, but they have to be careful, not go into decline and just see their app deteriorating, see the users move anywhere else using different apps and services, and MOMO just losing money. The Tantan app, they got introduced a couple of years ago. They got bought out in 2018. So I would consider this is a whole new setup, because MOMO certainly has a lot of positive effects on Tantan. There's a lot of synergies that can be exploited. And so I would consider 2018 as the introduction, because you get a lot of momentum from the MOMO app or the MOMO business experience into Tantan. So where are we? We are on the verge of the growth cycle here. This means monetization, user growth, or even if we don't have user growth, we have to monetize the existing user base with different kinds of services. And I think we are just starting here, as the numbers that I showed you before are proving. So user spending on the Tantan app is growing. It's growing on huge numbers. If we go back, MOMO revenue just doubled. It just doubled and deteriorated slowly for MOMO, but from here to here, we basically doubled. We doubled here. And if you double, doubling a couple of times, you got, the exponential kind of thing. You got hockey stick development, and it doesn't take a lot of time to see huge effects when you can double your revenues and the user spending. So there we are. And what the company has to do, and I think they are heavily aware of it, they need to focus on the value-added services of MOMO and the Tantan growth. And then they can work against the usual product decline and just have a rebound here. And if they make it, then the share price will get back on a much higher level. It will rebound. The business will rebound. And this is what I'm basically betting on. And I think the management is on a very good. They know where to dig deeper, and they know where to work on in order to get the ramp up here again. All right, so far for the company, the products, and recent developments. Also some key metrics here. I told you that I'm using basically Guru Focus to get a quick overview. If we look at the revenue, this is basically proving what I just said on this slide. We have a level of maturity with MOMO. Tantan does not generate positive cash flow for the company. It's still losing money, but this is just the big picture that we get. And I'm always looking at the real revenues, not the revenues per share, because revenues per share can be influenced by buying back or issuing new shares. So I don't care about it. I want to see how the business is doing on an absolute level. I look at the margins and compare them to the industry, or basically Guru Focus is comparing it to the industry. So if we got a lot of green color here, this is an indicator that I really like. And also the balance sheet should have a healthy look. Sometimes those comparisons don't work for me, because the definition of the industry might be very generalized. So you might have an all-over comparison with an industry that I would disagree sometimes, that every part the Guru Focus service is comparing the specific stock to the industry. Other companies that are in there, I would not see as a fair comparison, if that makes sense. So you still, this is just for an overview, but you have to dig deeper and do your own, put some more work into it. But basically what I want to say is I want to see a healthy cash balance to debt. I want to see a healthy balance sheet in general, an easy balance sheet that I can try to evaluate. Anything else is just too complicated for me, and I'm not comfortable with doing further research, because most of the times I just think that I'm not qualified to do so. And since my approach is doing my own research on things I think that I understand. And if I come to a conclusion to invest, then I'm willing to invest a bigger part of my savings into a very concentrated and low diversified portfolio. So I'm betting big on certain stocks. That's my approach. And what you want to see is the company able to generate cash? Generating cash is important because they have to service debt, they have to reinvest. And if you're just if a company just has one-off gains or one-off income sources, that's just not sustainable. But MOMO, and this I find very interesting, their operating cash flow is basically aligned with their free cash flow, or the other way around. So basically every dollar that is generated from operations is basically free cash flow and services the debt and the stockholders. So you can the company can do various things. They can buy back shares, they can pay dividends, and they can pay back debt and bonds. And the thing is, you need cash to do that. You cannot do that by just appreciating assets without selling them. I mean, then you have just paper gains. And what's a paper gain if you have to pay debt, right? But the cash generation of MOMO is very solid and very, very good, I think. And so this is what Buffett would say, I guess. You want to have companies that generate a lot of cash, have low levels of debt, and then it's very hard to go bankrupt. This is a metric I use to try to evaluate management's competence in allocating capital. If they are using too much debt or have too much cash flow from the outside in terms of taking on new debt, new financing, it's a bad sign for me. But what they did here is when they were buying, I guess this is when they bought Tantan. They took on some debt. They issued a bond, and they invested here. So you wanna see, or it's a good sign for me if those two sources of, or those two categories of cash flow are basically symmetric, right? You want to have your long-term investments financed by long-term debt. You want to have them congruent. You want to have, you don't want to have long-term investments financed by short-term debt that you have to revolve every couple of months or years, because it's not healthy for a company. And this is just, financial management 101. Try to figure out, do you have a short-term or long-term investments, and do you have to finance it with short-term or long-term debt? Basically, that's what created the financial crisis in the first place, right? You had banks giving out long-term loans and just refinance them with short-term loans. And once it was not possible to revolve those short-term loans that the banks took on, just take a look at Lehman Brothers, what happened. All right, the valuation. How do you even know if a share price is appropriate or not? You have to come up with some sort of evaluation, so you can say that the price level is okay, it's too expensive, or it's undervalued. And also, you want to figure out if a cheap stock price is actually a cheap stock price or a value trap, right? Meaning the stock is cheap for a reason, and you should not invest in it. So the first thing is I try to use common sense here, right? Business owner common sense. What do I look at? I try to think, what is it a fair price if I would buy the company 100%? And so what I did here is I took the balance sheet as it was reported in the financial transcript for the full year 2020. I took the balance sheet and took basically every virtual cash position, real cash, virtual cash, at what they are in the balance sheet, right? I mean, short-term, long-term deposits is basically cash that is deposited somewhere. Receivables, property, plant, and equipment, I assumed they can resell it for the price they have in the balance sheet because there's depreciation already included as far as I'm concerned. So I assumed that this was the fair value. I did not make the effort to figure out what's the PPE assets, are they fairly priced? And I don't have to do that, right? Because that's what the margin of safety is for. So I thought cash and virtual cash, basically cash, minus the liabilities, how much is left? So the net cash position is 1.3 billion, and that's a lot. So basically the company can just use cash in their virtual cash position, which are positions that they can easily transfer into real cash and just pay off their whole debt. So they're debt free, they still got virtual cash or cash in an amount of 1.3 billion. So the next thing is, when I'm buying as a company owner, the whole company, if I buy every share available out there, I basically pay the market cap, right? So a couple of weeks ago, the market cap was 2.8 million, 2.9 million right now, or market closing yesterday, we were at 3.16 billion. So yeah, I'm not really up to date, as I said before. I buy every stock. That's the idea. What do I get? I get, first of all, the net cash. So this is, to me, just out of my right pocket into my left pocket. Cash is cash. But I buy a premium for the rest of the company, which is, according to my calculation, 1.5 billion. So that premium, and my idea is, when do I get back the premium that I paid? So I take a look at the net income. That is 320 million. And if I assume that the company will not develop anymore, it just stays the same for the next couple of years, I will get the premium back in 5 years. Not even 5 years. And that's fucking cheap. This is very, very cheap, considering that I have a multi-billion-dollar business with many, many millions of users that I'm serving. And this multiple is very interesting, because usually when you buy smaller businesses, and as a profession, sometimes I'm involved in smaller business transactions. So the approach is basically, you take EBIT, you look at comparable companies that have been sold in the past, you look at the price, and then you try to figure out, I mean, this is an easy approach, right? Taking the EBIT, taking the average EBIT multiple paid for similar companies, add cash and cash positions, and deducting debt. So basically, X time EBIT plus net cash is company value. The same thing as here. And if we take an EBIT multiple of 5, those are small cap or micro or nano cap multiples. This is nothing. This is super, super cheap. And if you can buy multi-billion-dollar companies for small cap or for grocery store multiples, that's a heavy indicator for me that this company is heavily undervalued. And so we start here. I think this is the first sign of clear undervaluation, and it makes me dig deeper, keeps me interested. So then, in the next step, I'm trying to figure out the margin of safety. The margin of safety is, well, using another Buffett example. If you have a bridge that says you can drive a vehicle that's weighing 20 tons over it, right? You want to make sure that the bridge is able to also hold vehicles that are 30 tons. So basically 33% margin of safety right there. And what I did here is I was trying to figure out what is a fair reproduction value of the company. So that means I have to buy all the assets that the company has and put cash on the table for the net cash position. And the net cash position here includes everything that keeps the company running. It includes property, plant, and equipment. It includes the IT infrastructure, the people that I have to deal with, everything, just to have the setup for the business to keep it working as a machine, sort of, right? But what do you need? So just when you have the infrastructure and the people, who are you working with, right? You are working with the users, so you gotta evaluate the users. And so this company to me is pretty simple to value, because I think brand value for the MOMO app and the Tantan app or whatever, this is something that comes on top. And I don't know how, I don't have a real grasp on how to evaluate that kind of brand value. So this is something that might come on top. Of course, there is some sort of value, but I wanna go with the minimum, right? We want to keep the expectations low so that we can figure out a safe margin of safety, and that's what I'm trying to do here. How do you evaluate, or how do you say, okay, what would I have to, if I go into China and I want to reproduce a company like Tantan with the amount of users that I have and the amount of cash that I have and the whole infrastructure, what do I have to come up with? Because that is the price anybody else would probably pay for the company right now. Because you can sell an active user to someone else, as we have seen in the Tantan transaction. They just had users that they sold and a brand value. And there are people or other companies willing to pay a certain amount of money for an existing user that they don't have to acquire by themselves. So the closest metric to me is the customer acquisition cost here, because you always have the choice. Do you buy a user or do you create it yourself? Right here, we have, and you can research those numbers. You can research those numbers on Statista. How much do you have if you have to create the user yourself? How much does it cost for you to generate a user that is just installing your app? How much does it cost if you create a user that has to register to use your app? How much do you have to pay to acquire a user that is actively doing in-app purchases in your app, or that is purchasing your app for a fixed price? And the fifth category, how much does it cost you to generate a user that is subscribing for using your app over a period of time? And from the industry, there are average numbers that you can use. So what I did, I was trying to figure out how many users do we have in the apps, and are they paying users? Are they just users without paying for the app, or just registering for the app and just using the free features of the app, right? And we have to consider the net cash position. So these two are the focus points to trying to figure out what's the reproduction value of the company, and basically what's the minimum valuation for the company. I'm taking two scenarios. One is expensive paying users. I will explain. And the second scenario is cheaper paying users. So the first approach is, let me just switch back. If we look here, purchase and in-app purchase users, those are very expensive to generate because you have to put a lot of advertising into it. You have to put they are usually a lower number. So most of your marketing expenses go to a lower number comparatively. So that increases the active user cost right here. And I was assuming that we take the higher number, right? So the average of 85 and 75, which is 80. I used $80 for the paying user because there are two other things that happened. So other than in the US, in China, the cost per click for online advertising, online marketing increased heavily because there were many educational companies, e-gaming companies pushing into the same channel. So those prices just went up and exploded. So I think that it's just fair to assume that the prices will stay higher because a lot of market players shifted into the digital market. The prices will stay high because those competitors will go on and fight for market share. And so prices will stay higher. We saw when we focus on the core app MOMO, they generate a lot of revenue for the gifting services, which is basically in-app purchases. They don't have that much subscription services. Another thing for Tantan, they started with the subscription, but also add value-added services. But as we saw, the Tantan revenue is much smaller than the MOMO revenue. So I just took the upside here, or the higher number here, and I'm using $80 for customer acquisition costs for the paying user, and the $350 from here, because you have to register to use the app, right? You can't just download and use it. You have to create a profile. So we are here, $350. Okay, MOMO paying users, Tantan paying users, 9 million and 3.8 million. MOMO active users, I mentioned it was 114 million almost. Deducting the 9 million, we end up with 104.8 million users. Tantan registered users, 360 million. So this gives us a total user base valuation based on customer acquisition costs of 2.6 billion. Adding net cash 1.3 billion leaves us with a fair value of the company, or market cap, because I'm still assuming a business owner approach. I have the user base, all the equity is mine, and the net cash is mine. So everything that I own without debt just belongs to me. And if I sell that on the open market, this is what I want to get, right? So here we are with almost 4 billion. And the current market cap, I know I'm not up to the exact numbers from yesterday, is 3 billion. So what does that tell us? We have a potential further upside of 32% almost, or a margin of safety of 25%. So a fair share price, and I used 14.70. That was, I think, market close Tuesday, Wednesday, Thursday, whatever. So $19.3 a share. And this is something that comforts me a lot, right? So I know if I put money in there, minimum value still almost $20. And so the company's still undervalued. And yeah, at least Citigroup agrees. They gave Momo an upgrade and they come up with $90.3 a share. I don't know how they valued the company, but I just think I'm not that far away from the truth. I don't know their incentives to value the company. I have really no idea. But this is, it just feels good. You know, you come up with a number and you see someone else basically come up with the same number. So I think that just makes me comfortable that my thought process might not be that far from truth. Okay, so in the next approach, I said, well, we are valuing the paying users cheaper because we have in-app purchases, we have just subscription users, and I was just assuming a simple 50-50 distribution. So we get a lower number here. Customer acquisition user valuation base 2.25 million, net cash stays the same, so we come up with the lower fair market cap, so lower upside, lower margin of safety, but still from a price point from yesterday, I think it was 15 something up to 17.50. Well, it's still a nice upside we can have, and 20% upside if the market realizes that this is the fair value. 20% in a couple of months, that is huge, right? And let me be clear here. Those are valuation approaches based on numbers. Based on numbers that are relying on the truth of the financial statements, of the user base, the reported user base by the company, if the company is cheating, right? Because this is a concern for many Chinese companies, that the company is just cheating. This really, really sucks. And all the work done and put together in this presentation, it's just not worth anything. So assuming that for this kind of valuation, we have to rely on the numbers, we have to rely on the user base, we have to assume that management is fair, China is not a cheating country. This is something to really consider, because if those numbers aren't true, then there might be a huge downside no matter what. The company could only be worth a couple of bucks. Like, just look at Luckin Coffee, right? Turned out the numbers were fake. The company was basically fake, generating just made-up revenues, and see where the stock price went. If that's the case with MOMO, I don't think that it is the case. But you can't be 100% sure. You never can. This is one serious risk. And this is what's really bothering me, because this presentation took a whole lot of time. And if I'm dealing with cheaters, that would really, really suck. So what's the next step? The next step is taking comparable businesses. Now we know that the minimum value, the minimum fair value of the company, but this is just reproduction value or liquidation value, as you might want to have it. But it does not take into consideration future upside, future developments, future hopes from the shareholders that they want to price into the company. So we have to take a look at the other businesses from the same industry, or basically from the same service. So we take a look at the Western peers that are just freakingly highly priced, especially Match Group. And as you can see in the charts, this is just super high market caps for those kind of companies. And if we look at the absolute numbers, and this is always very eye-opening, this might surprise you. Those valuations might really, really surprise you. So we have price sales ratios of around 10 for Match, and we have a 1.5 price to sales ratio for MOMO. This is, in comparison, this is still super cheap. So what do we have here? The approach here is basically trying to figure out a comparable pricing the company or the shares of the company to the ratios that other comparable companies are valued right now. So what I did, took a couple of companies from the industry, looked at the market cap. Those are their revenues in sales. I mean, there's huge difference in the market cap, but sales is just, there's not much difference. So the price sales ratios are very, very different. Net income, this is an eye-opener. MOMO is a very profitable company. Look at the other companies, they just suck. So price earnings ratios are also very, very different, or even not existent, because the company is just generating losses. Bumble. Monthly active users was the base I was using to do the valuation. And if we just take the market cap and divide it by the monthly active users, which is, as most of the retail investors just price in, oh, you got to look at the growth rate of the user base and the user base, and it's just the user base. They just focus on the top line, not the bottom line. And if you can generate as much revenue as you want, if you only generate losses, then at the end of the day, you end up with a failing company, right? And I don't know why nobody is seeing that. Look at Tesla. They don't even generate much revenue. Like, what do they have? Black zero on the bottom line, right? But just because they are selling CO2 certificates. So, just something that doesn't cross my mind to try to evaluate such companies or put money into those kind of companies. Look at Bumble. Sales, not that big. Net income, negative. IQ, negative. YY, negative. And even Match, basically the same revenue as MOMO, just a little more than half of the net income. Does not make sense to me, but here we go. And here we try to put the MOMO share price to the market valuation of the other companies. So if we look at that, we come up with like this huge upside. Of course, this it's just ridiculous, but because I think that Match and Bumble are heavily overpriced. You can agree, you can disagree. That's just my opinion. People are expecting way too much, so we would most likely, be a lot higher, but not here. This is way too much. And also, if we look at what did I do here? Yeah, market cap by paying users. If we say, well, the paying users are the ones that generating cash and income, and we get other valuations for the company. And I'm much more comfortable with this ratio because I assume, well, of course, if you have paying users, those are worth much more than not paying users and just free users of the software or the app. So what I would consider a fair price of the share, and I wrote down the number on one of my due diligences that I posted on Reddit, is somewhere between 25 and $40. This is something I can easily see pricing in a bigger upside for the whole app. And so this is something, if you would ask me what's the fair value of the MOMO app or the MOMO company and the shares, I would say it's at least $25. So to sum it up, to me, it's easy to see that MOMO is heavily underpriced. It makes sense from a business owner's point of view, just to see that it's a very low valued company. It also makes sense from a margin of safety point of view, and it makes much more sense from a comparative business point of view. So I assume that there's a huge upside. MOMO shares can easily be worth $40 a share. And I can really sleep well with that evaluation. Assuming that everything is right, that the company is not fake, that the management are no cheaters, they will get back on track, of course. But it's just something that I can see. If that happens, we got a $40 a share. And that's why I invested in the stock. So competitive advantages, we got to look at the moat. This is a Buffett metric. Basically, if you research what does a moat consist of? You come up with switching costs, cost advantages, network effects, intangible assets, and efficient scale. I think we have a lot of positive factors here on the MOMO company. Switching costs are basically low if you compare switching from one app to the other app, right? It's not a big effort, but it is a big effort because people are getting lazy and lazy and lazy. Do you switch from Facebook to another app or to another social network? There were many Facebooks back then, but everybody stuck to Facebook because it was comfortable. Everybody else was there. So the real monetary costs of switching are low, but the emotional costs of switching are pretty high. So getting out of your comfort zone, in the times we're living where everything is fast, you get instant gratification, you don't want to waste time, you don't want to be uncomfortable with something that just pulls you off the sofa. It's basically, you feel a huge amount of switching costs, right? And so you want to stick with the winners. And since MOMO and Tantan have a big user base already, and they are the pure plays, there is a big amount of switching costs that you feel. Cost advantages, MOMO had higher margins than any other company in the sector. They kept 60% of the virtual gift revenues and only gave 40% to their streamers and talents. So other companies started with, I think, 50%. So MOMO had to slowly come down to those kind of ratios, but they have the bigger user base in their area of activity. So being a pure play in the hookup dating industry in China, they are the big player and they have the cost advantages. They have the big infrastructure. They have they don't have to invest that much more in marketing for the MOMO app. They can sustain the brand value, and in terms of existing infrastructure, they have advantages. If you're the new kid on the block and you want to come up with an app, you might have relative high investments into your whole infrastructure, and that's something that MOMO has just they are past this point. Do you have network effects? Of course you have. You have this big dating network, hookup network, and it's very interesting. You should really read that study. As I said, Tantan is a clone of Tinder. It has a swiping mechanism, and that's highly addictive. It's like gambling. Once you're used to it, and I saw friends stopping at the traffic light. I was the co-passenger. Driver took out the cell phone. He was single, using the Tinder app on the traffic light. Swipe, 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 swipe. Couple of swipes. Oh yeah, that was cool. And we drove on. So it's a highly addictive app. It has network effects. And therefore, this contributes a lot to the moat if you are a pure play in the hookup dating industry in China. So, and since there's only MOMO and Tantan, you got a moat there. Intangible assets, brand names, the two apps, and the pure plays, as I said. So, contributor right here. Efficient scale. We are addressing a niche market. There won't be 10 or 15 other dating apps there because that niche market is already dominated by MOMO. And as we took a look at the competition in the beginning, they address a different market. So if we are looking not in the video streaming market, but in a very, very niche market of hookup and dating, you got the big players right here. So is it an efficient scale of the company? I think so. Other companies will have a very, very hard time to get into that specific niche. So do we have a moat? I would say, hell yeah, we have a moat. Another thing that is very uncomfortable, or unfortunate, but you got to deal with it. It's the country risk of China. We have a lot of government interference. You gotta be, you always have to be aware that surprises might happen in the short term. We have industry regulation. The Chinese culture is also very different in terms of dating and acceptance of online dating. It's very, you might say, to Western standards, old-fashioned. So parents and grandparents come up with a potential spouse for you. So if you start online dating, you might have to explain yourself. Why are you not married yet? Why are you dating? Like, you don't do that in China. I'm not an expert on Chinese culture, but this is something I read. So I would, this is something I don't understand by heart because I just grew up in a different culture. And so you want to be aware of it and you want to read some things about it. What also sucks, international tensions. I mean, I'm positive in the long term because superpowers like China and the US, they have to get along in the long term because otherwise there might just be, they are just, too big to fail, or too big that they can't fail because there's so much interdependencies from the two countries. So of course there are ups and downs in their relationships, but in the long term they will have to figure out to get along. So it's something you want to consider, but you have to figure out if you're positive or negative about it. Of course you can read a lot about famous China frauds. Luckin Coffee, I think, was the latest one. And also other companies are on the watch list from famous short sellers like Spruce Point Capital or Muddy Waters that are heavily focused on finding frauds in China. Go to their website and check out the companies they are watching. It's not uncommon that those Chinese companies, they are pretty new to the game, and they grew so fast and so rapidly. And all the financial markets, you can compare it to the Western standard that has a stock exchange like existing for 100 years right now. China's new to that. And of course, when there's a young industry and young things developing, not as regulated as it is in the Western world, you have frauds. And naturally, this number is higher in China. Also, their culture of saving face is something you might want to consider. So there's this it's not uncommon to be lying in China, but it's not considered lying. It's just how did they call it in the Trump administration? Alternate facts, right? You don't want to lose face, so you tell the story a little bit different. Of course, it's not true anymore, but it's also not very wrong. Or you just used the lie to just keep your reputation running. Well, I don't know. I think it's just a human thing. Maybe if it's a cultural thing, like in China, of course, it's a much more bigger issue, because in the Western world, you wanna call out people on their bullshit, but still people have a lot of motivations to sugarcoat stuff. Well, this happened because it was his fault, it was her fault, but basically it was your own fault. So I think it's not that uncommon, but at the same it is. So be aware of that. Delisting threat due to holding Foreign Companies Accountable Act. Right. This is something that got into the spotlight. I think it was February, March this year. Totally sucks, because this is what driving the stock price down for many Chinese stocks. The SEC is trying to be able to audit the auditors of the Chinese companies to see if they are up to the right standards and make sure everything is fine. Otherwise, those companies can be delisted in the next 3 or 4 years. So to me, I think it's not an imminent issue, because 3 years is a long time, right? And also, there's an article that a recent response from some of the Chinese authorities, where they said, well, we tried to keep on negotiating with the US, but with the new administration, things got delayed, and proposals were not answered by the US. So it's just a back and forth, and I think there's so much money on the table in this game that they will have to get along here as well. It's a short-term burden on the stock prices, but I think they will find a solution here, and those companies will stay listed on the US stock exchanges. If not, look at slide number, what was it, 3 or 4? So you know what's the risk of the ADR structure and what can occur if those stocks are getting delisted. It's a complicated issue, I think. I'm net positive on the outlook of this issue, so I guess we'll be fine here as well, but it's something that you want to know. If you're not as comfortable as I am with the China risks, then you should not invest in those kind of companies. The company risks, I mentioned saving face. There's just some tactics you might want to know about when you are okay with the China risk, but you take a look at the company risks. Look at this blog and follow the link. There's some examples how you can spot potential Chinese fraud actions on a specific company. It's just something for information. It's good to know what to look for, so that you can react. Also, we have opportunistic management. The founder of MOMO still has a 70% controlling voting interest in the company, so his strategy might be our strategy, and if things go according to his strategy, if he wants to, so you might want to take that. Keep that in mind. Also, from the Spruce Point short report on the company, they figured out that MOMO has failed to report appropriately. They issued reports to the Chinese government that were looking different on the reports they've filed with the SEC. So I don't know if it was just opportunistic, if it was an error, but it's still fishy, and you might want to know about that. So I would recommend, again here, you should read the Spruce Point short report on MOMO. There are more examples that are in there. You just have to look at it, try if you still feel comfortable before you invest in the stock. Of course, it still sucks, and we still have the product risks. I mean, the products could just totally fail, not gaining momentum. The company might be a fraud, although I don't think so. It's just hypothetical potential risks you want to be aware of, but you have to put a probability to each of the risks and then figure out for yourself. Unfortunately, I cannot do that for you. To me, it sucks that we have to talk about it anyway, so thumbs down here. And if you are planning on, basically summing up what I just said, if you try to make money in China stocks and you don't trust China or Chinese companies, then don't invest in China. Simple as that. If you are, then of course there's these risks. You might want to consider it. Of course, you gamble a little bit on them, but the more you dig into it and the more you have your metrics or your logic that you try to figure out, is management fair? Are they fair players? Are they liars? Are they cheaters? The more work you put into it, the easier it gets. And of course, there are pros and cons for the current management. I would start with the bad ones, right? Spruce Point report. I mentioned it a couple of times. Just dig into it. Potential fake offers or potential fake offices for agencies. It's also in the Spruce Point report. Not going to elaborate any further on this. The asymmetric filings for the Chinese authorities and the SEC. 2015, I think it was, when they had a buyout offer from the management with backed by Alibaba. They announced taking the company private, buying out the shareholders. Stock price went up, and basically the takeover blew up, and everybody was selling their shares for a profit. So this is something I don't really like, but. Yeah, didn't Elon Musk do the same things when communicating he's gonna buy out Tesla for $420? I don't know if it was a fake statement because buying out for 420, all the meme numbers 420, 420.69. Gotta be aware of that. I don't know, but I don't think highly of Elon Musk, by the way. So I think he might be some sort of scammer too. You can agree, you can disagree, so I don't really know if that's just part of the game. And there are some untransparent or inconsistent accounting methods, and the company doesn't really reply to when you contact investor relations. I tried to do that. I didn't have an answer until now. It was 8 weeks ago or something, so this just sucks. I don't really like that. Sometimes I reach out to investor relations. I did it, for example, with UK company EasyJet. I had a question. They replied within a couple of days, so that's fair. It's not fair when you don't get any response at all, either because they don't care or they just are not playing fair. But you gotta admit there's also positive aspects towards management. I mean, they are buying back shares. They announced that they have been buying back shares. They are buying real cash dividend, so they gotta have cash. They are addressing the real issues. They are not sugarcoating anything like, numbers are getting better and better and better. To me, if management is always just telling the good news and avoiding the bad news, or telling you only about how things get better, it's just a red flag for me. And management is talking about, hey, we will see a decline in the revenue in the 2 digits. For the next year. They announced this in the COVID outbreak early 2020. And this is something that I really appreciate because, just tell me when something happens. And especially tell me when something bad is about to happen. So they said revenue is going down, net income will come down, user growth will slow down. They are also saying it in the 2020 transcript. So right now, they are not focused on user growth and so on. So they will keep on addressing the real issues, trying to to get the company and the products back on track. And there you go. Real issues, real communication, real cash payouts. So not everything can be fake, but you got to figure out for yourself. And it is really tough because it's not something that you put against a metric or you compare numbers where you can say, where you have black-white decision making. It's just 50 shades of gray decision making or 1,000 shades of gray, because you're dealing with people. You're dealing with all the different issues that come along in dealing with people, because people are complex creatures. And there you go. So management evaluation is tough. That's a toughie. So the management outlook, what do they say? Solid foundation for MOMO to pursue further growth opportunities in the year 2021. Huge tailwind ahead because of just population data from China. They are very positive on the outlook, but as I said, they are very conservative in their outlook. And they say, listen, it might take a while. We are not focusing on improving just numbers, revenue and net income. We are focused on the long-term growth strategy for the products. And I think that's fair. I think that's also an issue why people are, or why the stock price is low, because people are going from quarter to quarter. And I don't think it's a good idea, because that's just supporting gambling and short-term decision making. If you buy into a company, and you should be willing to hold on to the company for at least 1 or 2 years. I mean, I always sell when my price target is reached. I don't care if it's going up further. I just get out. So I'm not saying that I'm always holding a year or 2 years. I'm just saying that you should be willing to do so if necessary. But if you're going from quarterly report to quarterly report, and sometimes it's good, sometimes it's bad. I mean, how do you feel in winter? Winter sucks, right? You feel bad, you have a cold, you don't feel well. How do you feel in summer? Totally different. Everything is it's sunny, it's warm outside, you can hang out with friends, you can do something. Just different. Why should it be different with a company? Sometimes you have good times, sometimes you have bad times, and it can change from month to month or from quarter to quarter. So I don't really care about quarterly reports. I just focus on what I do here and what I'm trying to show you here. Listen to the management, try to figure out if they are fair and if it's a long-term fair play to me that I invest heavily in the stock. Right, so expectation long-term. Yeah, just everything that I already said, right? Huge tailwinds, more money for Chinese middle class, younger generation, more open to online dating. And there's just big growth ahead. And China is still the country you want to bet on when it comes to growth. I mean, they have 1.4 billion people. It's just incredible. So the measures that I would say management's doing the right thing. They drill down deeper into the strong areas, which is the open social space. They push boundaries to expand the footprint and other areas along the value. And the long-term mission is to have sufficient patience and tenacity to push through. So they say, well, we have tough decisions to make. They might take a while, and you have to be patient, right? And I think, well, 2021 will show a lot of positive aspects. And the worst case is you have to stay patient for a couple of years. If you're invested in stocks, you just have to wait. If you're invested in options, well, just roll them out, right? Do the same thing that Keith did with GameStop, right? He was buying options. He was realizing profits, roll them out, waiting. He was basically saying, hey, when I invest in a company, I'm focused on 18 months. That's when I think things will get back to normal. And that's what he did, and he profited massively. So there you go. That's the game plan for the stock. It just makes sense. I added these charts and pictures from the various sources just to underline that management's assumptions are fair. They are in line with projections for Chinese stocks and the Chinese economy and population. So there you go. Everything they say makes sense for the bigger picture. The only thing that's left are the Chinese or company risks, right? Product risks. If you have fraud in China, do they play fair? But everything they say, they focus on the right thing in general, I think. Yeah, singles in China total 200 million people. And we have paying users in Tantan of 3.8. So just double or triple that number. It's still nothing. Okay, summary. Competition. I'm neutral on this. Competition with similar services, but Momo Tantan remain dating pure plays with a strong brand. So I'm more positive than negative. So basically neutral here. I think there is competition for some services, which might add pressure to margins. But at the end of the day, I think Momo and Tantan are pure plays with many advantages. But you have to figure out yourself. ADS, ADR structure, just basic neutral positions. You have any one of us who is buying into the stock has to deal with it. If we like it or not, it's just a fact. So either we like it or not, I don't care. The Momo app, I'm positive, strong cash generation and brand, although reputation might not be good. The app has still proven profitability and has another upside when unleashed. When you unlock the new features and people are paying more for the services, hey, Momo gets back on track as well. Tantan, of course, it's the hope of the company, the growth hope. Most famous dating app in China and the Asian countries. It's not profitable yet, but the revenues are growing and the active user spending is growing. So everything looks promising here. The financials over the past 2 years, of course, an adjective. They suck. Spending went down. Not for Tantan, but for the cash cow Momo. So revenues is down, net income is down. Of course, how can I say that's positive? It's a negative, but that's due to the overall economic factors as well. And so I think this is a negative that can go back into, does not weigh in that heavily. How are the metrics? Metrics very positive, strong numbers compared to peers and the industry. That's what I showed you. We have a margin of safety, 25% something, or upside of over 30%. And the valuation outlook is also very positive. And if you look at my Reddit report, I came up with a 380% maximum upside. That's when you compare the company to the Bumble valuation. You can read it on my due diligence on Reddit. So take a look at it. That's where the number comes from. As I was saying, right, a target price that makes sense for me is about $25 to $40 a share. So it's still a huge upside, more than 100%. So there we go. It has a moat. I'm positive on that one. Country and company risks. It just sucks to have to talk about it. All the China stuff. Are they trustworthy? Are they not? Are there company risks? Are there management risks? Just sucks. In an ideal world, everything is fair and square. Everything is positive. You can rely on people. Nobody's lying to you. Nobody's trying to play tricks. Especially when it comes to investing your money. But unfortunately, the real world is different and the risks are there and they just suck. So it's a negative on both country and company risks. Shareholder friendliness. Well, if you buy back shares and pay dividends, I consider that shareholder friendly. If you generate huge amounts of free cash flow and you give money back, generate value for the shareholders, I mean, that's just awesome. And since the interests of the management are always aligned with the shareholders, anything that the management is thinking of is about making them richer, right? And even if they are not playing fair 100%, you are always aligned with the management. They will take actions that will increase the stock price. If you agree with it or not, or if you think it's fair or not, it is most likely to be beneficial for you than not. But only if they do it right. If they cheat and people find out, and if they have been cheaters all the time, yeah, then the interests might be aligned, but they are still lying fuckers, and they should go down with their stock price. So, but still, shareholder friendly. Management risks, yeah. Make of it what you want. It's tough to find out. So neutral. It's not up to me to evaluate that for you. and the management outlook is positive. They have the tailwinds, and in the big picture, it makes all sense. I have come up with a lot of links that I have used that I want to share with you. Take a look at them. Do further research. That's what I was saying in the beginning. I can only repeat myself. Do your own further research. I mean, this is a long episode. It goes through a lot of condensed information, but you don't want to miss out on something. And if you decide to follow my approach and you take this approach serious, you still have to put further effort to figure out if this is the right investment for you. So start with this presentation if you want, but look at further sources, dig deeper, challenge my thoughts, my opinions. Just be a natural skeptic. Whatever you can think of might go wrong. Other people might think of that as well. And when you can think about it, it might be have a probability assigned to it that it happens in reality. So anything that you can think of, just dig deeper. Google, find articles, read related articles. Also look for companies that have failed because of that, of what comes up to your mind. And this is the hard part, where you want to put work into. And you should really do that. So start with the presentation, follow the links, challenge my thoughts. I would be very happy to receive your feedback, receive any questions. It's not my full-time job to communicate on social media and so, but I'm very happy to do so if I find time. I put very much effort into this presentation. It took me a while. I hope you find it interesting. I hope it helps your approach. That's basically what I want to do. And if I'm wrong on something, please let me know. Because when you let me know that I did something wrong, I'm risking also my own savings here when I invest in a company. So I'm very, very happy if you let me know so I can switch to something else in case I made a terrible mistake. But there we go. I hope you enjoy your Saturday. Hope you're gonna have some nice drinks. The weather is nice here in Germany right now. I'm gonna have a few drinks today. Wish you all a happy weekend. Get back to the channel whenever you like. Feel free to contact me, Twitter, StockTwits, or Reddit. My name's StonksTrader84. There we go. Have a nice freaking weekend, everybody, and take care.